Hi, this is Alessio. Hope you're well. This will be a very important video because, as you may remember in my previous video a few weeks ago, I said, well, the kiss of death has now happened on the stock markets. And as we know, what happens in the stock markets can have a major impact also on other markets too, like Bitcoin and crypto. So it's very important to pay attention to what's happening in the stock markets if you want to know also what's going to happen to Bitcoin and other markets as well. Now, here's the main thing. In my previous video, I mentioned that now that the kiss of death has happened, it's quite possible and likely the stock market could go down a little bit further to test the 50 simple moving average in the monthly chart, which, by the way, we did test that level. Now, here's the other key point. In my previous video, I mentioned that after a kiss of death happens, usually the stock market has a bounce or a rally for the next 2 months, especially from the period from October to December, for the reasons I've already mentioned, which, by the way, I will cover again in this video and the reasons behind it. But the bottom line is, I said it's quite probable and likely that we could see a 2-month bounce from Halloween, from about the end of October to December. And it's quite possible we have already started this bounce or rally in the stock market as it is, although that remains to be confirmed. We shall see about that. But in any case, the question I'm sure you're probably wondering is, okay, so we've had a kiss of death. It's possible we could see a bounce for the next 2 months. But at the end of it, then what? Are we then going to collapse into a major bear market continuation, like the major bear market crash of the year 2008 or the dot-com crash? So is it likely the stock market could fall into a major long-term bear market? Or is the stock market going to do something else, something much more surprising, perhaps something that nobody expects? For example, a bottom and a major rally to all-time highs. So in this video, I'm going to share with you a very important pattern, a pattern that happens all the time on the charts, which you need to know about. And if you see this pattern, this structure on the charts in the next 2 months, between the end of October to December, this could give you a lot of information about what potentially is going to happen next year in 2023. All right, guys, it's going to be a very interesting video. Join me. All right, guys, welcome back. Now, since we're on the subject of the markets, it's very important to mention something important here. You may remember a video interview I did recently with Gareth Soloway, the trader Gareth Soloway. And here's a short clip of what Gareth Soloway said in that interview.
For me, the way I'm trying to prepare is diversification amongst assets is important.
Now, I agree with Gareth that learning how to diversify into various assets, for example, like stock markets, Bitcoin, crypto, metals, bonds, and so on, they are important. But you may be thinking at this point, hang on a second, I'm already diversified into various assets like metals, stock markets, Bitcoin, crypto, bonds, and so on. And my portfolio is getting hammered this year in 2022. So what's going on here? As we know, stock markets, bonds, metals, Bitcoin, and crypto have been dropping this year so far. The 60-40 stock bond portfolio has completely failed this year in 2022, as you can see from this chart from Goldman Sachs. With rising inflation, there have been very few safe havens this year, except perhaps cash like the US dollar. But I think we could be forgetting that diversification should be done in a proper way. You see, according to an article by the financial firm Goldman Sachs, in fact, here's the article, in an environment where you have both growth risk and inflation risk, like stagflation, you want to diversify more broadly to asset classes that can do better in that environment. Real assets could be more important in a cycle where inflation is higher. Precious metals and even fine art can help protect purchasing power when consumer and commodity prices are climbing quickly. Here's a chart which shows this, by the way. So if you're concerned about inflation and you would like to diversify your portfolio across key asset classes, such as fine art, a major asset which many people unfortunately mistakenly ignore, then I suggest you consider Masterworks. Masterworks allows you to invest in the same art that the rich invest in by fractionalizing the works of art. So you can invest in works of art by major artists like Banksy or Picasso for a fraction of what they pay to purchase. Masterworks knows what they're doing when it comes to selling art. They have over 530,000 users on the platform and 6 exits for an average of 29.03% net return to investors. A striking difference to the S&P's near 22% loss this year. By the way, one of those exits was as recently as August for a 33.1% return, which shows just how inflation resistant this art can be. By the way, if you don't want to wait until Masterworks finds a buyer, they also offer a secondary market on their website where you can trade shares with other members. Please also remember that nothing in investing is risk-free, so decide responsibly. Masterworks has a number of webinars where you can watch and learn more about their services. Getting started with Masterworks is very easy. It takes just a few clicks. You go to their website, create an account, browse their artwork, and then you can learn how to diversify your portfolio with one of the most resilient assets in the world. By the way, make sure you click on the link in the description, which takes you directly to the website. I want to thank Masterworks for sponsoring this video, which also helps our charities as well. As I'm sure you know, any money we get from sponsors, we give that money to charity. All right, guys, let's get back to the video. Now, you may remember in my video some weeks ago when we talked about the kiss of death signal on the stock markets, which, by the way, increases the probability of a potential long-term bear market. Usually after a kiss of death signal, there tends to be a 2-month window, a 2 to 3 month window where there is a bounce, a reversion to the mean, or some kind of a rally in the stock markets. I mentioned that the time window for this particular bounce or rally in the stock markets is between late October from Halloween to December. Now, the reason why we think there could potentially be a major bounce or a rally between late October, Halloween to December, firstly, usually after a kiss of death pattern occurs. For example, in 2008, after a kiss of death occurred, there was a 2-month bounce, as you can see there in the stock market. Same happened, by the way, in the year 2000. After a kiss of death, there was a 2-month bounce. The second reason has to do with the dumb money, smart money index. And usually when dumb money gets extremely pessimistic, there tends to be some kind of a reversion to the mean bounce. The third reason, by the way, actually, I think the third one is much more important. That has to do with something called seasonality and the Halloween effect. The Halloween effect, as the name suggests, simply means that seasonally, between the months of October to December, and specifically between late October, from about the 31st of October to the end of December, there tends to be a bounce or some positive strength in the stock market. And what that means is this 2-month window from Halloween to December is seasonally very strong and a positive period for the major stock markets. Now, it's possible we may already have started this bounce or this rally or the Halloween effect. It's possible. Again, it's not confirmed just yet. We shall have to see. But I actually think it's quite probable and it's quite likely we could see some kind of a bounce or rally between Halloween, end of October to December. Now, you're probably thinking, okay, well, so what? So what if some kind of a bounce or rally occurs? Does it matter? Yes, guys, it matters. Because, and by the way, this is by far the most important part of this video. What happens during that potential rally from October to December? The structure and the pattern of that rally or bounce can give us a lot of information about what may potentially happen next year from January onwards. Because again, I'm sure you're probably thinking to yourself, are we about to collapse into a major long-term bear market like the one in 2008 and also like the dot-com crash of the early 2000s? In fact, in both of those bear markets, the 2008 bear market and the dot-com bear market, the stock market dropped by 50% from its highs. So the question you're probably asking yourself is, could something like this happen in the next 12 months? Are we about to see history repeat itself and see a major long-term bear market crash like the previous ones? Now, everything depends, in my view, on what happens in the next 2 months. In other words, guys, what happens in the next 2 months from October 31st, Halloween, to December, to the end of December, can give us a lot of information about the next period as well, the next 12 months. You see, here's why. Depending on the kind of structure the market forms in that 2-month window, that can give us early clues, early indications of whether or not we're about to collapse and dive into a hole.
That's what she said.
Thanks, Michael. By the way, let me also say this, that even though I think a bounce or a rally is likely to happen between October 31st, Halloween, to the end of December, that's by no means guaranteed or certain. Again, we don't have a crystal ball. We cannot predict the future with certainty. It's only a probability based on the 3 factors mentioned in this video. So the bottom line is this. How can the next 2 months help us in understanding what could happen next year and the potential for a major long-term bear market? So here's the key thing you need to remember. Markets, and by that I mean any market, it could be stock markets, Bitcoin, metals, whatever you like. All markets essentially follow 2 major patterns or structures. So when markets or when price moves, it can move in an impulsive fashion, in an impulsive way. What I mean by an impulsive pattern means it's formed of 5 waves. So when we use the word impulsive, it means it's formed of 5 sections or 5 waves. For example, this rally you're seeing here on this chart is a 5-wave pattern, and therefore it is impulsive. And by the way, when a market is trending, when it's deliberately moving in a given direction, whether it's up or down, it is usually formed of 5 waves. So for example, a 5-wave rally is giving us an indication that the market wants to move and trend in the upward direction. Now, there is another kind of structure you need to know about, which is called a corrective structure or a corrective move, which is what this 3-wave structure you see here. And by the way, corrective structures are often formed of 3 waves, not 5 waves. And by the way, you've probably heard of corrections in the market. You've probably heard of the phrase when the market is correcting or making a correction. These structures are often formed of 3 waves, not 5 waves. And that's really important. For example, have a look at this chart. In a bear market, when the market is trending down, the corrective structures, those moves you see there in red, those are all 3 waves. So remember, in a bear market, in a downtrend, The corrective rallies are all formed of three-wave structures or corrective structures. And in fact, here's an example for you. This is the major bear market from the year 2000, 2003. And notice during a major bear market where the stock market dropped by 50%, the rallies, as you can see, the rallies are all three-wave corrective bounces, three-wave corrective structures. And by the way, corrective structures are often also called ABC patterns or ABC rallies, like the one you see here. Now, here's the main thing you need to remember. If the market only rallies in three waves, if you only see a three-wave move up, that is a major clue that not everything is right. In fact, the market's giving a strong warning that that rally could fail. Because if the rally is only three waves, that means it's potentially a corrective rally, a corrective structure. And that means it's likely to fail and result in another drop, like the ones we saw in this chart, as you can see there, and in this chart. So remember, if you only see a three-wave rally, that's giving you a warning that that rally could fail and result in another major decline, a major drop, and a continuation of the bear market or downtrend. Let's have a look at some recent examples. Here's an example for you on this chart of the S&P. In fact, this is the weekly chart of the S&P. And notice, for the last several months of this year, so far this year, the S&P has only made corrective rallies. In fact, notice, for example, the one we had in the spring of this year was a three-wave structure, three-wave rally. And notice that failed and then dropped. It continued the downtrend. In fact, you will notice this summer, we had also a three-wave rally. We had a three-wave structure and that also failed and then dropped once again. And by the way, here's something interesting. The same thing happened on Bitcoin as well. As we know, Bitcoin and stock markets are correlated positively. Here's an example for you. Just some months ago, Bitcoin rallied in a three-wave structure, as you can see there, and that failed and then dropped. And back in the spring of this year, notice that Bitcoin also formed a three-wave rally, a three-wave structure, which of course was a corrective structure, as we know. And again, as we know, corrective structures usually fail. And as we can see, that corrective three-wave structure ultimately was giving us a clue that that rally was going to fail and drop lower again. By the way, I know what you're probably thinking. You might be thinking, well, yeah, sure, that looks great in hindsight. In hindsight, you can look back and say that was a corrective three-wave structure. But surely at the time, in real time, you couldn't have known that. Actually, yes, we did. Back in April of this year, I put out a member video and I gave a warning in my members video that that rally could potentially fail because only three waves was corrective. Here's a clip. The biggest concern is that the movement here, this movement that's been happening so far since the January lows, has not been showing itself as a particularly impulsive move. And by that I mean it does not look like a typical 1, 2, 3 wave of an uptrend. This does not look, again, very strong and very healthy. Let's say Bitcoin instead falls back below the 40K and indeed 39,200 level here. So if it falls below the lows of this week, just near 39,200, and then follows through, if we see follow through below 37K as well, then that actually could potentially significantly increase risk to the downside, likely to test the lows of January, and yes, potentially even lower as well. All right, guys, so how does this help us going forward about the stock markets? Well, the way it helps us is this. Because it's quite likely and probable, again, by no means certain, but it's quite probable, we could see a rally or a bounce or a reversion to the mean bounce between Halloween, between October 31st and December in the stock markets. The question is, what kind of a structure will this bounce or rally have? Will it be 5 waves or 3 waves? Well, as I'm sure you can appreciate by now, what I'm getting at here, if that rally from Halloween, from the end of October to December, is only 3 waves, in other words, if it's a corrective rally, then guys, brace for impact. Because if we only get 3 waves in that rally or bounce, then the market is giving us an early clue, an early warning sign that not everything is right, that a potential rally could fail and once again push us into a major bear market. In other words, sink us into a black hole. And indeed, a corrective rally or a 3-wave rally could be an early warning sign that the stock market eventually wants to fall next year into the continuation of a bear market, a long-term bear market that could last several years. In fact, remember this phrase. If you only see a rally of 3, very cautious you ought to be, for obvious reasons, because a 3-wave rally is corrective and therefore it's a sign of weakness. It's a sign that that potentially could fail. However, if between late October, between Halloween and December, we see a 5-wave rally, then as I'm sure you know by now, a 5-wave rally is impulsive. And that means the market could be giving us an early indication, an early clue that it's trying to establish some kind of a bottom or indeed a multi-month rally to all-time highs. In fact, remember this phrase, if you see a rally of 5, then the uptrend is coming alive. All right, guys, so it's really that simple. If we see a rally or a bounce, and if that bounce or rally, which by the way is not guaranteed or certain, but I think is quite likely and probable, so if that bounce or rally between that period happens to be 3 waves, corrective, then it's giving us an early warning sign. It's giving us major clues that, guess what? Brace for impact. That bounce or rally is likely to fail and push us yet again into a black hole. However, if the rally or bounce is 5 waves, that's giving us an early indication that perhaps the market is trying something else. The market perhaps is trying to establish some kind of a bottom and maybe trying to establish some kind of a long-term multi-month rally to all-time highs. And this sounds crazy right now. I know it sounds a bit unlikely at the moment, but again, we have to remain objective. We have to remain open-minded as to any possibility that could happen. Remember, anything can happen. Anything is possible. So we really need to remain objective as possible and open-minded as possible. All right, guys. By the way, make sure you watch also our member videos. In fact, twice a week in our member videos, I'll be doing commentary and updates on the chart, the stock markets and Bitcoin, and also gold as well. So if you're not a member, you can join in the link in the description. And also, guys, let me know your opinion. Let me know in the comments what you think. How do you think the structure will work out between Halloween and December? Do you think we're going to see a corrective structure or an impulsive structure? Let me know in the comments. Thank you very much indeed. Bye for now.